Let's talk about technicals then. Rahul Sharma is here. Rahul, the data seem to be suggesting that liquidity is ample. What about the F&O side, especially the FIs on Nifty futures? What kind of levels are you seeing the long short data is telling you, and the kind of addition or shedding we are seeing? Because in the cash market it's ample, but what about the futures and options side?
Yeah, so very good afternoon. As you rightly pointed out, it is the FI long aggression which is seen on the index futures. The kind of long position that they've seen clearly indicates that markets are in the bull grip, led by the FIs. Now, retail has got stuck on the short side. Now, as we've seen in the past, a few months back, it was the similar situation where FIs were short, retail was long, and we saw a reversal happening. This time around, I think because the broader market participation is there, because leadership or sector rotation is coming in from different segments of the market, we feel that there is more upside that to be had. Now, 19,500 is one level which we are keeping an eye on in case this is navigated safely in the next couple of days. We may very well be headed for 19,800 and possibly 20,000 by the end of this month as well. So, it's a make or break kind of a level. Around this level, Bank Nifty is showing some sluggishness. At least, it is not forming newer highs. But the contribution is coming from IT, from Reliance Industries, which is, sort of pulling the markets up today. Apart from that, I think a bit of profit taking is what we've seen in the last 2 or 3 trading sessions. So it is uncharted territory, difficult to sort of identify where exactly will markets see profit taking. The best thing to do is at this point in time is, instead of having a hedge or instead of having a short exposure, it is best to do sector rotation. Wherever sectors like reality, sectors like auto, sectors like mid cap, small cap, where the returns have been phenomenal, take some money out from there, maybe 40-50%, and put it into sectors which have not done well. So 2 or 3 areas of the market where we feel still there is a lot of headroom left. One is Reliance, which is an index heavyweight. It has got upside. It has got a lot of headroom on the upside. Then we have the IT space, which has formed a bottom, formed a base, and now seems to be ready for another round of up move. And then we have metals which have not participated in the rally at all. So I think these are the areas where one can look to shift money. This is a bull run without doubt, but I think this is not the time to short the market. Probably look at sector rotation and keep on booking profits at regular intervals.
Book the profits completely, just do the sector churn. In fact, since you talked about metals and IT, the space that you're watching out for, give us the names there. Which are the stocks that look the strongest?
Yeah, so on the IT space, Tech Mahindra is something that we particularly like. This stock had an elongated consolidation, formed a base around the 1,000 rupee mark. We've seen the stock consolidating since July onwards. Now, finally, we think that this entire sector coming out of the woods, and the projected target in the very short term, we feel that 1250 is very much on the cards for Tech Mahindra. The longer we go, I think 1,450 to 1,500 is also possible towards the end of this year. So one can stay long in Tech Mahindra. For the short-term traders, the stop loss can be had at 1,100 on the downside. Apart from that, Reliance is something that we like in particular. The ratio chart of Nifty versus the Reliance, which is a relative comparison, has bounced back from key support area, and we feel that just a catch up of Reliance with the Nifty would mean the stock will be back to its previous highs of around 2850, and a bit of outperformance can actually see the stock heading towards the 3000 mark as well. So these are two top picks. We feel that there is risk reward is still favorable in spite of what has happened in the broader market, and one can look to stay long in both of them.
Rahul, how are you approaching oil marketing companies? Ever since our oil minister actually indicated that there was a trade there, not in literal terms, but saying that oil marketing companies making enough money that they have scope to cut prices. Remember, just 15 days back, that triggered a sense that they are making over recoveries right now, and that the first quarter numbers will be very good, and stocks were under-owned. So it sparked a rally last 2-3 days. But does it have more juice even from current levels? in your view?
Yeah, so we have been bullish on this OMC space right since Brent oil went into a rut. No real rally happening over there, and secondly, like you said, it has there was a case where we had under recovery. Now there is an over recovery. So clearly that is reflecting in the stock prices as well. My sense is this momentum could continue. Maybe the value trade has gone. It's more of a momentum trade now, where we may feel that another 10% extension can be had from these levels. What we like in particular is IOC looks, still good for another upside of around 10-12%, maybe around 100 is where we see the stock heading up to. So, like I said, it's more of a momentum trade. These stocks are trading into sort of a, semi-blue sky territory, and, above all their resistance levels, above all their, moving averages. So my sense is, traders can actually, make the most of it, as far as the upside is concerned.
What about PSU banks? That trade also seemed to have got warmed up, at least after a gap of, say, few months. So which one would you latch on to in PSU banks?
Yeah, so PSU banks, after around 12 weeks of consolidation, have finally come out of the underperformance. We saw private banks do extremely well, like led by the likes of ICICI, HDFC Bank. Now, I think it's the time of the PSU banks. Now, PSU banks can be participated in two ways. One is, you could simply buy the PSU Bank Bs, which is the ETF, or, in terms of stocks, I think one of the best set is there in Bank of Baroda. So Bank of Baroda, number tier two, or rank two in terms of, the size of the PSU banking space. We feel this stock is headed for a new life high. The previous life high that the stock had is around 228 odd. I think that should be the first target. But I think towards the end of this year, we may very well see the stock head towards 250 as well. So, this is a breakout which has been, happened on a long-term charts around 190 odd. And we feel, Bank of Baroda still is a top pick as far as the PSU banking space is concerned. On the smaller banks, I think you could look at Union Bank. That looks, pretty solid on the charts. It could very well be headed for, another 20% return from current levels. This week it has done fairly well. We did have a buy recommendation on this on Monday around 74 odd levels. But we feel this has got legs up to 1995 on the upside. So these are two names which we like particularly in the PSU banking space, and we feel the entire basket should do well in the next 2 to 3 months.
After 12 weeks of consolidation, there is this upside which is available on PSU banking names. We'll let you go on that note, Rahul. Appreciate you joining us on the show. But